Hi, this is Paul from experttrading.com, and this is a quick tutorial video on the BIAS heat map, BIAS depth heat map. So this heat map at the bottom has 6 time frames. What we do is look from the top. This goes up in time frames, so it's slightly reversed, but you'll understand this, that this is the lower time frame, goes up a time frame, up a time frame. So when we're on the 15-minute time frame, we go up 6 time frames, so we understand where that bias is. Is it bullish, is it bearish, or is it neutral? Now this gives us our go no-go gauge for trades. Okay, so it doesn't matter which strategy you're using. In this case, in this example, I'm using the X-Spread Algo. So on oil, on the 15-minute time frame, I got a 5-star sell here, but look at the heat map. We're only red on 2 or 3 of that those time frames. Then we're neutral, and then we're bullish, so we stay away from that trade. Again, we get another 5 and a 6-star sell signal here. Look at the bias heat map. We're not really full bullish, but then when we turn around, we get a 5-star buy signal and a 6-star buy signal, which has all of these in green. So all 6 time frames are bullish. So that heat map, that depth of bias, is telling us actually these are good trades, and this is where we are right now, and we're using the manager then to manage these trades. So it's a go no go gauge for indicators, for strategies, for signals that you're using. It looks down lots of different time frames and gives you that bias on those time frames, whether it's bullish, neutral, or bearish, to give you that confidence in going into your trade. So this is another example. This time we're using currencies. So this is US dollar CAD on the 10 minute, and we're looking at the opening range breakout strategy that we can use. When we get these gold European opens, the London pit opens here, we are in theory looking for long breakouts on this because the bias for that range is bullish. But look down at the bias heat map. We're not totally bullish there. We've got 3, I think. Then we just go through. We've got 2 levels where we are neutral, so it keeps us away from there. And then the price action starts to come back down, and then all of a sudden we're breaking out of the Australian opening range, because with Forex we are looking at those different opening ranges. And the bias on the opening range is red, but also look at the bias on the 6 levels, the 6 different time frames here, all red. The short is fantastic. When we're going back up through those ranges, one would say, let's go for the long here. No, look at the bias depth heat map. 2 levels, still neutral, no good. We come back through, we get the New York gold pit open at this point here. We're looking for bearish. It goes sideways for a couple of times. The bias for the range is red, and then all of a sudden we go all red, and it goes hell for leather to the downside. So again, different strategy, same use with this bias heat map. We are go no go gauges no matter what type of signal we're using. So this final example is a different type of strategy that gives us a signal, which is called the roller coaster. This is on the NASDAQ on the 15-minute time frame. But again, those instances where we use the bias depth heat map are very, very important. So right back here, when we get a signal for the roller coaster, look at the bias heat map. We're not fully convinced. There's still red and yellow in there. It's no good. It comes back down. You see how it comes back down here. Then when we come back through that original entry, didn't take out the stop there, that would be the time to get into this long, because we're fully bias green. We're fully bullish bias on all 6 time frames there, and there you go. It moves up, takes out the trailing stop there for that roller coaster. So that was the point, not here when we got the early signal. It didn't take out the stop, so we should be looking at potential trades there. But then as we start to move back up towards that original entry, the whole 6 time frames that it looks up on all bullish bias, that was the time to take the trade. And then conversely, coming back down, we get a signal at this point on this candle here, we are good to go. We're all red, we're all bearish bias on all of those 6 time frames, and there is the trade. Trading stop taken out for the profit at this point here on the roller coaster. Now, when we get this bullish signal here, we've only got 2 levels, maybe 3 of green. The rest is yellow and red. We don't take the trade, and look what happens. It doesn't trigger. It would have been a loss. So again, that bias depth heat map is there as a go no go gauge for lots of different signal strategies. It really is that support that you need to give you the confidence to actually go into that trade or not go into that trade. Hopefully that helps. Speak to you all really soon.